Welcome. My name is Kieran. I'm the Head of Aviation Advisor for KPMG, and welcome to our annual lead report sessions in conjunction with Airline Economics. I'm delighted today to be joined by Norm Liu, CEO of Nordic Aviation Capital. Norm, if you wouldn't mind, everybody knows who you are, but you might talk a little bit about Nordic, if that's okay.
Sure. We were the world's largest regional lessor up until 2020 when COVID started and encountered some financial difficulties. So we went through a restructuring, which we completed middle of last year in June 2022. And our strategy has shifted where we've also resized the fleet down to about $3.5 billion of assets. And we're also shifting the fleet mix from regional only to narrow bodies. So we'll focus on ATRs and 220s where we have an order book, and then 737 and 320s going forward.
Yeah. And maybe just think a little bit about that from your perspective as we think about how the airlines are performing in that mix of regional and narrow body. How is that? How are you seeing that going forward?
Well, the airlines, in general, are doing very well because demand is good, capacity's been constrained. But there are different gearings going on. So U.S. and Europe has been moderating a bit. Asia was going strong, but moderating a bit as well. China hasn't really come back fully. You've got Middle East doing well, except in the conflict areas. Latin America doing okay, but they still have some financial restructuring thing perhaps going on there. You've got a shift from revenge travel domestic to international. You have business still a little bit not up to 2019 levels, and finally cargo is moderating. The regional side is no different. Things have picked up, and there are some specific issues like the pilot issue in the U.S. Limiting some of the regional growth there, but generally elsewhere it's just picked up like the rest of the market.
And you mentioned geopolitical risks. Is there anything that's particularly concerning in relation to the geopolitical or macroeconomic factors going on?
Well, it's if you think back, the last time you had two hot wars was back in the 1970s, and we were also in the midst of the Cold War. So in many ways, we're regressing back to the past, which is quite sad because aviation in those years from the 1980s to 20 is basically the golden era. So in effect, you're losing some of that globalization through deglobalization. And so if you look at Russia had to go away. That was about 5% of the world fleet. If you now look at China a little bit more carefully, that's about 15%. So 20% may be different than what it used to be. And things are breaking into sort of global south and north. And so it's a bit sad having grown up during these great years to see some of these things reverse. And you'll need some great leaders to get things back on track. Ronald Reagan in the U.S. And I was just having lunch with a Chinese delegation, Deng Xiaoping. Back then, they don't make them like they used to. So I'm a little bit worried about that situation and leadership emerging or not.
Do you think that would influence how lessors go to market, or how they think about the market going forward, even how they think about the fleets?
Well, for sure, jurisdictional risk post the Russia-Ukraine events have risen higher up on everyone's screen. Probably not fully enough, but that's one change. I think the aircraft types are all the same types. So the geopolitical risk is impacted more. Just how you look at jurisdiction. I'm not talking about Cape Town. I'm more talking about macro. And I think you can all talk to the lawyers and stuff, but when you look at we had some planes in Belarus, and it wasn't really a great airline. They just had a political leader who, the EU shunned, and so all of a sudden we're out with our kit and, having to scramble to find homes for that kit.
Yeah.
So heightened jurisdictional risk is the main difference.
Yeah, and I suppose, what are your thoughts then on, say, the aircraft supply side, be it from a secondary market or a new water market? And do you think there's much of an impact that that's having on the asset values?
Oh yeah, I mean, look, both the major OEMs, Boeing and Airbus, slots are delayed. Okay, Boeing had the Spirit issue, Pratt issue on Airbus. They're also facing labor shortages and material price escalation, because all the renewable projects want the same titanium and aluminum, and so there's pressure on escalation in pricing beyond just delays. And for sure, that's you'd rather not see this, but it is benefiting leases in terms of more extensions, higher asset values, at least for the short term, and also higher lease rates on new placements. So it's helping, but you'd rather see things a bit more orderly. On the engine side, I'm just shifting gears a bit. I mean, and I'm just focused on the narrow body side. The LEAP has some issues in harsh environments, but generally it's been managed because they have reasonable spare capacity. I think the Pratt issue is much more complex. They had, a bunch of issues, whether it's oil leaks or compressor overheats or fan durability. But then now this powdered metal issue, that's a big one. And what fleet it impacts, the time of the fix, the financial impact, those are, I think, still on the early runs right now. That impacts values probably for the, but again, you'd rather see everything work out. You'd like to see the planes. A lot of the lessors are counting on growth capex from there, and so if they don't get the growth there, then they have to hold back on secondary trading, things like that happening now.
And you mentioned kind of two buckets of issues with OEMs. You have kind of technical and design and quality issues versus labor and stuff, which is more structural.
Yeah, secular.
And both are hard to fix. But do you think they fully understand or fully committed or doing enough to improve those issues?
Well, they're trying to. Both OEMs are trying their best, but if young folks want to go to Amazon or Walmart and not do shift work, it's sort of hard. So they get the new apprentices in. There's also a productivity situation, because the people that are retiring, have decades of experience versus the new trainees. So they're trying the best that they can, but it's secular. It's not going to fix overnight. And the materials, you've seen the wind industry struggle, and they have all the support, from the governments and everything, but they can't build because of labor and material. So that, that's no surprise. It's impacting aerospace as well. It'll impact SAF, refinery, things like that. So this is it's not just an aerospace issue, it's a broader infrastructure issue.
And you talked about lease rates rising a little bit. What impact do you think the interest rates have had on that and may have on that going forward?
Yeah, I mean, it's been a dramatic, 500 basis point increase in the last year or so. So lessors that have maturities coming due, they've had to, maybe double or even triple their coupons. Unfortunately, the unplaced metal or extension rents, while they benefited from some of these supply issues, they lag, and so probably not fully accounting for some of these money cost shifts. But over time, they'll have to equilibrate. I think when that's existing money deals or new order placements. When it comes to new money purchase leasebacks, lessors have to recover their cost of funds. So that's been, well, initially that was a tough sell to the lessees. I think lessees have now sort of adjusted to those flow-throughs.
And also, we might touch on, say, aviation debt markets. What do you think, I suppose, your current assessment of that is? Again, if we look at it in three segments, you have capital markets, traditional debt, and no alternative lenders.
Yeah, look, the IG market is open. There's quite a bit of demand. The ABS market, there's a recent issue by Willis on engines. That's sort of slowly opening back. That'll take a little bit longer. So, cap markets are there, especially for IG. Banks, I'm surprised there have been some entrants coming in, and so in terms of warehouse lending, in terms of term out, specific collateral deals, bilateral deals, they've been present. The export development agencies are also active for new slots. And then finally, there's some of the alt lenders for probably sort of higher risk type because they'll generally require higher margin type returns.
And you mentioned earlier on about repositioning the fleet. So I suppose that's giving you an interesting insight into the type of investors that are in the market at the minute. Are there newer types of investors that haven't been there before?
Most of the different types are well represented already. There were Asian banks, a bunch of years ago, and then other financial institutions. More recently, you have the alt managers coming in, whether it's their infrastructure, their credit, or their special situations areas. I think that's probably been the biggest shift. The Japanese tax market has been present as well throughout. So probably the biggest shift is to sort of the alt community.
Yeah. And obviously since COVID, we've had, and lots of airlines utilize their balance sheets through COVID, which naturally led to a higher percentage of leased fleet. But do you see that continuing over the medium term? Is that?
Yeah, I see, right now it's saying 45-50%.
Yeah.
I do see that creeping up a bit. I think people recognize leasing is 100% financing. And it's not just op leasing, but it's JALCOs and finance leases as well. So you can preserve your cash by going through leasing. Lessors have slots, so that will help the percentages a bit. And a lot of the mega orders out there, Indigo and the like, they've relied heavily on leasing. So I think for those various factors, ultimately it's a residual risk sharing game as you get to the end of the decade and the OEMs come up with some new gizmos next decade. But so I do think there'll be some migration up a bit.
And do you think, I guess looking and considering scale for lessors, how important do you think that's going to be going forward? And do you think that will drive M&A activity?
Yeah, well, scale is critical in any business. You can spread the overhead costs. You have funding advantages through a more diverse book. You have sort of customer OEM relevance. Now, having said that, having run GCAS, which is the world's largest, I don't think I still had a bet and try to get deals any way I could. No one cares about your ranking. They care about what solutions and what can you do for them. But there's no doubt there's a economic benefit. And I've been doing this for 3 decades now, and the M&A, it just ebbs and flows. It's just constant. There are people coming in, coming out, and I don't see that changing for the next decade either.
You talked before a little bit about how everybody's competing for resources, aviation versus wind energy,
Right.
etc., etc. But maybe bringing it back to, let's say, the environment and sustainability from an aviation context. How important do you think that's going to be over the next couple of years?
Yeah, I mean, it's been critical. For lessors, it's like, getting the most fuel efficient fleet out there. And also understanding the technological shifts out there from a residual impact. So ATRs, for example, have hybrid electric coming in the early 2030s. Boeing's look at this sort of truss wing, folding wingtip, vane motors. It's electric powered assist. But you have to understand that because we're in the residual management business. So it's the fleet and the technology shift directly for the lessors. And when we have to understand the whole SAF situation, because other than fleet, ATM, and operating efficiencies, which are an airline thing, it's SAF. And while there have been pronouncements and things like that, we have to be very realistic on SAF. Obviously, the banks have EU taxonomy rules and things like that, especially in Europe. We have to be cognizant of that. I think that there's been a shift in the dialogue in the past year, like last couple of years. It's like it was the end all, society's at risk, planet's at risk. I think now it's been much more of a balanced discussion. There's talk about before it's fossil or renewables. Now it's like, well, gas can be a transition fuel. Before it was like new technology is great. Now people are I like the old technology because it works. So reliability is important. I think people have a much more realistic view on SAF and all the issues with supply availability, with refinery capacity and cost. And so I think it's moved to a sort of more realistic place than maybe a couple of years ago.
Yeah, very good. And one last one, if that's okay. So looking across the next 12 months, what's your level of optimism?
Well, I feel positive, but have to be very vigilant on things. The way I sort of look at things from a historical perspective is, we've gone back to a sort of pre-COVID world on the airline business, so demand cycle, stuff like that happening, but you still have, congestion on the supply side. But we've had that before with 787 delays, 380 wiring issues, unfortunately the MAX strategy. So we're sort of, that's on the airline micro side. On the inflation and interest rates side, we've gone back to, I call it pre-great financial crisis world. So that's, we've been there before. It's just not the past decade plus. And then what's the toughest to me is just that with these hot wars and the Cold War that's sort of starting up again, we're regressing all the way back to the 70s, and that's quite a shame. And the issue is that all of these things that were events in the past, they're all happening sort of at once, and you really need a new brand of leaders to help that, and you need everyone to. It's a communication issue too, and I'm not sure our media actually helps that. Not the aviation publishing meeting, but the general media, because they tend to splinter issues, oversimplify them, and so the world needs a sort of a new leadership and an understanding of some of these issues. And so, I'm a little bit worried about the geopolitics because all the progress can dissipate very quickly.
Norm, I'd like to thank you for your insight and your time, and I'd like to thank Airline Economics again as our partner in this. So thank you for watching.
Thank you.